some positives, some negatives. I'm very surprised that there was no announcement of the windfall from the black money scheme being used for Jan Dhan accounts. They have decided not to do that kind of politicking. Big disappointment on the corporate tax. He has cut the tax rate to 25% for small companies, but not for the large ones. But you know, the whole point of cutting that tax rate was to make Indian companies competitive with their other Asian competitors. And it is the larger companies that are competing rather than the small ones. So this I would say was a disappointment. Capex increase of 25%, positive. I'm glad that has taken place. The fact that there is a 35% increase in the income tax advance collections, again very positive. It shows that demonetization is having an impact on collections, even if you don't get a large-scale extinction of the old notes. There's a move on political donations to make it more transparent. The intentions are good. I hope it will get somewhere. But reducing the minimum donation from 20,000 to 2,000, I don't think gets rid of the loophole. I think they will just increase tenfold the kind of contributions. So instead of having X contributions of 20,000, you will get 10X of 2,000, and I think the problem will continue. It will not change. There is relief for the middle class. There's a kind of middle class relief on the income tax, which may have some political implications. The creation of a new tax bracket of 5%, the idea that this will spur additional income tax payment or compliance, I think is mistaken. The group that is not complying is the middle class, which is getting relief rather than more taxation. I do not know that this by itself can increase compliance. However, if you do data mining and aggressive going after mismatches that Mr. Jaitley referred to, I think the tax administration system, there are many moves to improve it. Hopefully in the future, it will result in more money, revenue coming in. I'm disappointed that the fiscal deficit, instead of sticking to 3.0%, he went to 3.2%. The additional sum available for infrastructure, it's a tiny part of the total. It does dent the credibility. He says that from next year onwards, they will go down to 3% as per the FBRM the NK Singh committee report. Okay, but I would have been happier if he had done it now. It would have shown more credibility and more resolve.
Right. Swami, just to interrupt you. Swami, just to interrupt you. We'll get your thought. We'll get a detailed analysis from you in just a bit. But I want to get reactions from the entire panel. NK Singh, Jahangir Aziz. We've got Nilesha of Envision and Rashesh as well. NK Singh, to you first. Okay, we'll go to NK Singh in just a bit. Jahangir Aziz, if you can hear me, is it a big disappointment for the market? If you see the reaction, it seems to be pretty favorable. The first cut reaction of the market is positive. First tick is positive. The fact that he's slipped on the fisc marginally, is that something that was priced in? Jahangir Aziz?
I think it depends upon whom you're asking in the market. I think most of the people on the fixed income side will be relieved that the issuances wasn't much larger, closer to 3.5%. I think people on the equity side most likely were expecting many more things as they usually do. So I'm guessing that equity markets most likely will be more disappointed. I think the fixed income side has heaved a sigh of relief that the amount of borrowing isn't very large. In fact, probably lower than what the market had expected.
All right, Jahangir Aziz, hold your thoughts there, because I do have the architect of the FRBM panel that has made recommendations, something that Finance Minister Jaitley has chosen to embrace, is studying very carefully, but he has very categorically said that for next fiscal, unlike the recommendations, he is going to go to 3.2% of fiscal deficit. Is that a number that impresses you, or is that a number that disappoints you, Mr. NK Singh?
Well, it is the choice of the sovereign and the government what number they would like to go with. But let me, on the face of it, say that given the extraordinary situation of boosting up the economy after demonetization and the fact that there are other uncertainties, there was some understandable need which he may have felt to increase rural spending, particularly for the informal sector, which have been hit hard by the transient effects of demonetization. And he has, of course, if you read his whole paragraph, he has, as recommended by us in the FRBM committee, committed himself to return to the path of 3% next year. And that he has extensively dealt with the recommendations which we gave. So as far as I'm concerned, really, I mean, he has, most important thing is that he has adhered to the path of fiscal consolidation. He has gone down from 3.5 to 3.2%, not reached 3% in one go, but in 2 steps. So I would say that from the viewpoint of signaling to the market that government would act fiscally in a prudent, responsible way, that signal, I think, comes through quite powerfully from the speech of the finance minister. Of course, when our report is in public domain, if the government chooses to put it in public domain, there are a lot of institutional mechanisms which have been outlined in that report. And since he has dealt with this.
Right.
Okay, now, for the moment it looks like it's a win-win situation for the market. There is no mention of any tinkering to long-term capital gains tax, no mention of any change to even the short-term tax. And I'm going to get one quick reaction from Ramdev Agrawal and Rashesh Shah. Rashesh Shah, as of now, looks like what markets were expecting, anticipating, that fear has got subsided.
Yeah, I think I guess you can clearly feel that there is a sense of relief, I think, both for the equity markets and for the bond market, because I think even 3.5 going down to 3.2, I think for the bond market it's a huge relief, but also for equity markets, I think there is no long-term capital gains. There is a lot of other changes that have happened, and I do think that the income tax reduction for the Aam Aadmi in that sense will result in consumption stimulus, and that will help with corporate earnings.
All right, income tax reduction will result in demand boost, but Nilesh, just come to you. The other big positive for the markets will perhaps be the divestment target, 72,500 crores. It's always a higher target. They never really match up to this, but is that a number that impresses you at all? They haven't been able to meet its previous year's target.
No, but I think this time, they look to be more convincing, that number.
What convinces you about that?
Because I think the whole model which they are adopting of taking out some more public sector undertakings and getting them listed, doing IPOs of railway PSUs, I think fantastic. That's a fantastic move. I think it's a bold idea. To take forward the ETF experiment, CPSE ETFs, I think that again is a fantastic thing. So I think they have clear-cut ways of trying to achieve that divestment target, and therefore this time it looks more reassuring and more convincing.
But the market is what is reacting to this budget. Sensex up 1%. Oil and gas stocks in focus in light of that comment of the finance minister that they're looking to create an oil behemoth. Contours of that is not something we know yet. Ramdev Agarwal joins in live as well with the market verdict. Ramdev, the first verdict from the street seems to be a positive one. What is it that the market is liking in the budget? No mention of changes to long-term capital gains tax regime and a couple of bold reform measures?
He's breathing a sigh of relief, so you can make out that even he's also relieved that no tax changes have happened.
But I think what we need to find out is that, the oil and gas sector is also in focus because the custom duty on LNG has been reduced very substantially. It's been halved from 5%. And, that's a good point. But Mukesh, let me come to you on taxation, really. So personal income tax, small relief. For high net worth individuals like yourself, there's a big surcharge that's coming your way. But are you surprised that he hasn't moved on excise and service when he should have, because the GST is right around the corner?
No, I'm not surprised. In fact, the choice before him was whether to levy this tax for a part of the year or to straight away move to a higher rate of excise duty. Also, you could be in a situation where, particularly for the services sector, if increasing the service tax rate could mean that it could have an inflationary factor. I just wanted to make one observation to the point that Swami made, where he felt disappointed that the 25% tax rate applies only to medium and small scale industry. You see, please bear in mind that he's done his math very well. He talked about that the fact that there are only few thousand companies that have income above 100 crores, profit above 100 crores. So what he's trying to do is that he's trying to take away a small part.
Come back to you because there is so much happening in the market that it needs attention. Ramdev Agrawal joins us now, and Ramdev, let's start with a smile on your face. In the morning, we were dreading that the taxation structure would change. So far, there is no mention of that. Real estate stocks are on a fire. So can I assume that you're a happy man now, and you are telling your dealers to buy, buy, and buy?
Yeah, actually, it is the best budget without much proposal, without any disturbance, and revenue receipt has been upwards of 17% for the current year, and next year with the data mining and the kind of data people have, my sense is that it is going to be even higher. So I think this is a very good backdrop they have set, and a lot of reforms are ahead, GST and all. So I am very happy that there is no tinkering this time here and there.
Obvious culprit, Sandeep, every time is ITC in United Spirits. Nothing has happened at least on that front. So look at ITC in United Spirits. Those two stocks are dancing as if it's a new beginning.
We also need to keep a focus on PSU banks, I think.
That's right. Banking stocks in focus, stocks like ICICI Bank rallying up over 4%. Ramdev, what do you see in the budget for the banking sector that seems to be, that the market seems to have taken a liking for? And a quick word on the oil sector, the move to merge, to create a massive oil behemoth. How do you think the market is going to read into these two proposals? Ramdev?
So this oil companies proposal is quite dramatic, very big. We have to really get into that, how they are going to make it. If it is going to be one corporation, what kind of conversion will happen. So that we have to really understand. I mean, it's very unclear right now. No comment on that. But I think banking recapitalization, amount has been very, very muted at about 10,000 crores.
Also joins us, and Naren, good morning. In the morning again, there was a bit of a doubt as to what Finance Minister would do in terms of a balancing act. Do you think this is a clear budget, clean budget, and now we are all set for a very strong post-budget rally as well?
Yeah, I think clearly financial assets have a very good scope to deliver very good returns over the next few years. And in this budget, there was nothing which can be said that was negative for financial assets. So clearly over the last 3 to 4 years, we have had a continuous increase in financial assets, and that will continue, and therefore the scope for the markets to become costlier, even if earnings gets delayed, exists, and the outlook for the market looks pretty good for the next 1 year.
Right. I'm going to take this back to NK Singh, because the FRBM panel's report is not just on fiscal deficit, it's also on sustainable debt management. And the finance minister did make a mention of this while he was talking. Mr. Singh, the debt to the GDP ratio is something that you've advocated very, very strongly in this in your report. The finance minister did make a speech about that. Are you happy with what he's saying on borrowing? 3.84 lakh crore, which is substantially down from 4.25 of last fiscal, in fact, this present fiscal.
Well, I think I'd just like to make 3 very brief comments, if I might, Supriya. First of all, I think that the proposal to list all PSUs was also a suggestion which we have made in our FRBM report as part of the effort to increase government's transparency. So I'm glad that the finance minister has accepted that proposal. My second comment is that, as I have mentioned, that the path of fiscal consolidation has been continued in this budget. The markets would not have been unduly surprised to have, instead of 3.2. We have, of course, suggested a debt to GDP target, as the finance minister mentioned in his budget, of 60% debt to GDP to be achieved by 2023, 40% by the central government, 20% by the states. And I think having a robust debt anchor and to have a fiscal deficit as an operational target is the right strategy of making India's fiscal debt and fiscal norms to be comparable with best international practice. So I think the finance minister, by mentioning this in somewhat greater detail in his budget speech, has indicated the path which he intends to traverse, namely 3.2 this year and going to 3% next year. And we have recommended the continuation of that for the next 2 years, so that we are able to achieve what we regard is the optimal debt to GDP ratio of 60% for the country as a whole, in line with best international practice, in line with other standards which you have applied on solvency, staying away from the cliff, and really making debt to be the principal anchor, which all over the world is now the well-accepted practice.
Right. In minutes from now, we're going to be joined by Arvind Subramanian, Chief Economic Advisor to the government. We'll also be joined by Shaktikanta Das, the Department of Economic Affairs Secretary and the Chief Architect of this budget. I'm going to request my stellar panel to stay on. I'm sure all of you will have questions for these budget architects who are going to be joining live and exclusively on ET Now. But Jahangir, a quick word on what he's done for the banking space. In light of the NPA mess, he's tweaked some of the provisioning norms, some relief for the banking sector. On recapitalization of banks, he's not changed the estimated 10,000 crore rupees that he had committed to giving the banking sector in FY18. He said, I might make more funds available if need be, but no additional allocation for banks as far as recapitalization are concerned. How are you reading the proposals as far as the banking sector is concerned? Jahangir?
Again, these are very small changes that have been done. The big question still remains that the size of the ultimate bank recapitalization still remains unfunded. We could find out different ways of funding that, but we still do not have clarity on that. So, it's just small changes. It doesn't really change our outlook for, what is needed to get banking sector start re-lending into the economy, and that, the binding constraint to growth, to ease that in a sustainable manner, that still remains a binding constraint. So, small changes, not anything that we would turn around and say, okay, from tomorrow onwards, credit-fueled growth is back in India. That's not happening anytime soon, unless the banking sector is addressed more completely, and that still hasn't happened.
Very quickly, affordable housing, real estate, the two jam sectors are getting a big boost. This is an earnings revival story. Markets would be delighted with the prospects of new earnings coming in.
Absolutely. I think this entire focus on housing, affordable housing, real estate, capital gains reduction for long-term in real estate holdings is a good thing, because real estate affects everything else. Steel, cement, employment of the unskilled workers, all of that. I think it's a huge one. And actually, compared to that, outside of the quantitative part, I think the non-quantitative parts in this budget are equally important. About the political funding cleanup, the abolition of FIPB, this affordable housing and the focus on rural sector. Huge, strong message that this will result in growth, especially consumption-led growth.
Yeah, I think
Guys?
they look good. I think this is very positive for them, especially for those kind of companies which are developing residential homes in tier 2, tier 3 cities.
It's interesting because for FY18, nobody was counting in for earnings revival from the real estate sector, and this becomes as a surprise. Sunil Singhania, to your mind, what this budget has done which will stroke the earnings revival?
See, very clearly, the focus has been on capital expenditure, and the finance minister clearly said that the private capital expenditure is taking some time. So basically, you needed the government to spend, and I think this allocation of almost 24% higher than last year in terms of government capital expenditure, I think that should lead to a multiplier effect, which is rightly talked about by the finance minister. Also, hardly any changes, and continuing with the tax process, I think the continuity always helps. And this should also lead to a lot of clarity, a lot of feel good. And with finally the spending kicking in, we are very positive, and I think it could not have been a better budget in the given circumstances.
So, all right, now this is a mega ET Now exclusive. Arvind Subramanian, Chief Economic Advisor, joins us live and exclusive from North Block. In minutes from now, we'll also have Shaktikanta Das, Department of Economic Affairs Secretary. Dr. Subramanian, thanks for joining us here with ET Now. We've got a stellar panel with Swaminathan Iyer, our consulting editor, a whole host of market experts and CEOs, including Deepak Parekh. All of them have questions for you, but I'm the privileged position, so I'm going to start off by asking you on, are you disappointed with the fact that the government has allowed itself some fiscal leeway? Swami is disappointed. He says that's the big negative. The fact that they've slipped on the fisc by 0.2% hits the credibility of the government. I know you raised a question on credibility of rating agencies in your report just yesterday, but was this necessary given the demonetization overhang?
Yeah, I think that, let's be clear on one thing. First of all, the fiscal deficit path is consistent with steady consolidation for the last 3 to 4 years, last 3 years. So, in fact, if this happens the way it does, we will have seen about a consolidation of the fiscal deficit of about close to 1.25% of GDP over 3 years. And my own view is that governments acquire credibility not by saying what others want you to do, but by doing what you say you will do and adhering to it. So I think it's a steady consolidation path. It's consistent, and I think the government has acquired its reputation for fiscal consolidation. Let me also say that, remember that there's always a delicate balancing act between, saying, to sticking to some pre-announced path against the cycle. As I projected in the economic survey yesterday, there is going to be a dip this year and recovery next year. Private investment remains weak. So this is a delicate balancing act, but without in any way, deviating from a consistent pattern of steady fiscal consolidation.
Indeed. Dr. Subramanian, hold your thoughts there, because we've got a very, very power-packed panel here with the best of market voices and corporate India. I have the pleasure of welcoming Mr. Deepak Parikh on the show as well. Mr. Parikh, your first take on the budget, the fact that fiscal deficit will be breached next year by 0.2%, and of course, corporate tax will not go down for big business. Corporate tax will go down for the medium and small enterprises, which account for 96%, but not for the listed entities, really. You answer that question, and then if you have a question for Dr. Subramanian to pose.
No, I think on the corporate tax, I understand that it may have been difficult for the finance minister this year to do anything for listed companies, for companies whose turnover is more than 50 crores. I say, we accept that gladly. I don't think we, overall, I think he's done a very fair deal, and I'm not too concerned about the 3 to 3.2%, provided next year he comes back to 3%, and marginal increase in the fiscal deficit is acceptable to me with growth coming back. To Arvind Subramanian, if I can ask that on private sector investment, capital spent by the private sector, how do we kickstart that? Because, that is one engine of growth which is not growing at all. Can you hear me?
Yeah. First of all, I must insist that all of you be, kind of little bit fair in the terminology that you use. I think we're not breaching any target. I think we're not expanding the fiscal deficit. I think what is happening is a steady consolidation, but by a little bit less than what all of you think is the right path. So the consolidation path continues. Second point that Deepak asked about private investment, I think first of all, to the extent that you're going to cut tax rates for small and medium enterprises, that should have a positive impact on investment. The second, of course, is that the public investment allocation has gone up, and so we are hoping that that will, as long as private investment remains weak, that will fill in for some of the shortfall in private investment. So a cut in corporate tax rates for the small and medium enterprises, public investment to fill in for some of the shortfall, and to the extent that also individual income tax rates come down, I think consumption will be boosted, which should in turn spur some growth and some investment on the part of the private sector as well.
Let me toss it to Swami then, who's joining us from our studio in Delhi. Swami, do you have a question for Dr. Arvind Subramanian? Swami?
Yes, Arvind. I'd like to know, what are the assumptions that you have made for the GST tax rates? I mean, some people have thought the service tax is going to go up because that's what the GST is going to fix.
Yeah, okay.
So I wanted to have some idea of in which direction is this thing going to move, and is there some kind of cushion so that when the actual announcements are made, that the revenue might be higher. The second question I have is, what is the size of the windfall from demonetization, which you talked about in the economic survey? Both, I mean, as I said, there are three components. One is the notes that are made extinct, the voluntary disclosure 1, voluntary disclosure 2. What would be that total amount of that windfall?
Yeah, okay. So it's a very good question, because that also has influenced, for example, the glide path for fiscal consolidation. The revenue outlook for next year, one has to be a little bit cautious for a couple of reasons, right? On the income tax side, there is going to be some increase in the tax to GDP ratio, in part because of what, Swami, you said, that we expect some increase in disclosure, and therefore some increase in compliance, and therefore in increase in individual income taxes. So that's one. But on the indirect tax side, the picture is much more guarded, because one, the windfall we got from the excises will not happen next year. And so that is now a big component of revenue, and that will in fact grow slower than nominal GDP. So that's one. Second, remember, Swami, on the GST, next year will be the first full year, not even full, the first year of implementation. And given a lot of the implementation challenges, one, both at the central and the state level, and the fact that the center is committed to compensating the states up to anything below 14%, means that the center's indirect tax kitty will be challenged. And that's why the projection is, guarded and, very cautiously optimistic on the indirect tax side. So the sum of the two, the overall tax to GDP ratio will go up by a little bit, but not by a whole lot, because of the pressure on the indirect tax. Last point, as you rightly said, Swami, there are at least two components to the fiscal windfall. One is what happens on the tax side, and that's on the income tax side. We can't be sure now of how much exactly, but we expect that it should be some, especially since, as the finance minister read out, the data analytics are going to improve. We can hone in much more easily on the people who are really non-compliant. So the second component of the windfall, of course, is the unreturned cash. We don't know as yet how much. We're waiting for the RBI to come through, and whether it's going to be small, medium, or large. I still don't know. But if it does, that might provide the cushion in the event that there are glitches in GST implementation, or oil prices going up, or whatever. So some cushion we need, and maybe that will provide the cushion.
I wanted to ask you a question. In the economic survey, you had spoken about the sorry state of the banking sector in India, and you'd also suggested something called PARA, a public sector asset rehabilitation agency. But there's no mention whatsoever of that in the budget. Given the state of the banking sector, and that the government has set aside only 10,000 crores, are you disappointed? Is this the way to revive the banking sector, particularly public sector banks?
No, see, I think you have to remember that not everything that the government, is discussing, wanting to do necessarily gets announced in the budget. So I think the challenge of the banking system is high on the priority, and there's the entire year to actually think about and come up with how we need to respond to that situation.
Stay with us. I want to get a word from Deepak Parekh, as well as been patiently listening to your comments on the budget. Mr. Parekh, you asked this question to Dr. Subramanian on revival of the Capex cycle, and that's been the big concern, the fact that the Capex cycle hasn't revived despite this government being in power for 2.5 years. Do you see enough steps in this budget for the revival of the Capex cycle? Is this a pro-growth budget, would you say?
The private sector capex expenditure will only happen if the factories are running at 90% capacity. Today, on an average, Indian factories, whether they're Indian companies or multinationals, are all running only around 65-70% capacity. So there's a huge amount of installed capacity which is not being put to use. This is because the demand has been low and because of dumping of everything from China. And you saw what happened in the steel industry, where now with the minimum import price and some price controls, Indian steel industry has started performing, and the capacity utilization is going up from the 60 and the 50%. So the bleeding which was happening has stopped, and cement companies will show during this year and next year much better results. but they, the government can't put a minimum import price on each and every commodity, each and every product. So we have this problem of China dumping everything. This year, the trade imbalance between India and China is over $50 billion in 1 year. We buy more than 50 billion from China than what we sell. So that issue has to be tackled, and it's not only an India issue, it's a global issue.
All right, let me get...
I don't know what Arvind thinks about it.
Sure, I'll get Dr. Subramanian's views on that, but I want to ask a quick question to Chanda Kochhar as well, Managing Director and CEO of ICICI Bank, a big corporate voice joining us live and exclusive on ET. Now, Ms. Kochhar, thanks for joining us here on the channel. Your initial reaction to the budget, would you call this a pro-growth budget in the backdrop of the massive demonetization exercise? Does it tick all the boxes? Do you think it's a bold enough budget given the circumstances that we are in?
Yes, I think it is indeed a pro-growth budget with so much of allocation of public funds towards investment. And not just that, I would say that it's pro-growth and at the same time has maintained fiscal discipline in that sense, directionally. So I think it ticks all the boxes of focus on, investment, on rural, on digital, on youth, on skill development, and at the same time, maintaining the direction of fiscal discipline.
Right. Ms. Kochhar, hold your thoughts there. We've got Dr. Arvind Subramanian joining us as well. I have an exclusive on ET now. I've got a whole host of panelists with questions for him. Rashesh has got a question for Dr. Arvind Subramanian. Rashesh, over to you.
Hi. Dr. Subramanian again compliments on a great, balancing act. The question I have is about the divestment target. We have seen over the last few years that whatever has been the target, we have fallen short of that. So how confident are you that we will achieve the target, and is there any possibility of even exceeding that?
Yeah, see, I think that, by the way, even this year, I think the shortfall is not as big as last year. I think that, so we've done better on that this year. And I think next year, especially with the listing of all these companies, I think one should be more hopeful of meeting those disinvestment targets. I think, getting the public sector undertakings, including the railway enterprises to list, I think is actually a very positive sign and should help us meet our disinvestment targets. I mean, the open question, of course, is that, what about strategic disinvestment? And I think let's see how that goes.
Ms. Kochhar, a quick question to you on steps taken as far as the banking sector is concerned. We've seen a whole host of steps taken there, even though the bank recapitalization amount for PSU banks hasn't been increased from what was committed of 10,000 crore rupees. But several steps taken for the banking sector. How do you read the budget in light of the steps taken for the banking sector? Ms. Kochhar.
Yes, I think, if you look at it, first of all, the payments regulator within RBI, I think that is going to streamline the whole payments value chain substantially. As far as the capital allocation to public sector banks is concerned, while the amount mentioned is 10,000, but the finance minister, I heard him say in the speech that view can be taken if more is required. Then additionally, a whole focus on resolution and, the entire legal system or legal ecosystem to enable resolution. I think that also is a very, very good and positive impact.
All right, Ms. Kochhar, do stay with us. We've got a big global voice joining us as well in this special telecast. Jim O'Neill joins in live from London. In minutes from now, we'll also be joined by Shaktikanta Das, Secretary, Department of Economic Affairs. Jim O'Neill is a voice that people around the world wants to hear. Jim, what's your reaction to this budget? How do you think the foreign investor community is going to look at this budget? Is it a pro-growth budget? Does it tick all the boxes for you, Jim?
I'm still trying to think through my thoughts about it. I mean, my initial reaction is that there doesn't seem to be anything that is particularly eye-catching. I think it continues broadly the theme since Modi was elected, actually. I think, what is this, his third budget? Each of the three, for somebody that likes to do big things, is most notable, in my view, for how unexciting they are. And he typically, yet again here, comes up with a fiscal number, which is what the markets were expecting. So in that sense, it's nothing particularly exciting. What I would say is that, of course, it comes against the background of his very ambitious policy about trying to improve the role of money and to cut out corrupt and inappropriate use of cash. And I think it consolidates that effort. And I suspect the international community will be quite impressed. I obviously have to add immediately that it's against the background of an extremely peculiar and unpredictable environment in Washington. So the reaction will be dominated primarily by the circumstances of how people are thinking about Washington. And in that regard, with the dollar now being weaker, that probably helps for a more positive reaction to this Indian budget than otherwise, would be my guess.
Huge provisions for their non-performing assets. They get very little tax benefit for it. The finance minister actually made a significant increase in the amount of tax reduction for the provisions from 7.5 to 8.5%. How much of a difference will that make to bank bottom lines? And will that significantly improve the position of banks, their financial position?
Are you asking me?
Chanda, this is for Chanda. Chanda, my question was to you. That banks have been, laboring under the huge provisions that they have to make for non-performing assets. But at a time when NPAs are increasing and provision requirements are also increasing, the finance minister has given them a helping hand. He's increased the tax reduction for these provisions from 7.5 to 7.8. How much will that improve the financial position of banks? And will it significantly improve their bottom lines? Chanda?
Yes, so in fact, I was saying earlier that I lost the connection when we were talking about the impact on banking industry, and I was going to add a few more of these points. Indeed, what happens currently is that, while the banks make provisions for non-performing assets, there's a limit up to which they can charge it for their tax purposes unless they fully write off those provisions or that account. So that percentage which is now going to be allowed for tax deduction has been increased, and that definitely was a much required thing. We had all kind of made a request and demand for that. So that's a positive thing which will actually increase the net profit after tax in that sense, because it will reduce the tax burden, make some more provisions allowable for tax. The second thing is that just for the banking industry, I think the entire digital push, that itself is a positive again for the banking industry. The one more factor that is positive is this entire focus towards affordable housing. And I think that in a way creates a huge amount of multiplier effect, but also positively impacts the whole lending push towards housing. And then finally, of course, the entire infrastructure spends and the allocation for infrastructure spends.
Ms. Kochhar, this is Supriya, Shrinate from the Mumbai studios as well. Do you believe this budget has created enough space for the RBI to move into a lower interest rate regime domain?
Well, interest rates depend not just on the budget, they depend on various other macroeconomic indicators. But I would just say that one thing about inflation, that, they've actually delinked vegetables from that APMC, and I think that will enable the markets to find the right prices for vegetables, and that can actually work quite positively sometimes, on the right price being found. But interest rates actually, as I said, depend on many other things, and we as banks always look at the deposit and the lending interest rates, which depend on many things, including cost of funds and cost of deposits.
Thoughts there, ma'am, because it is indeed my pleasure and our honor to welcome Mr. Shaktikanta Das, one of the chief architects of Budget 2017, which we at the Times Network call our Tryst with Destiny. Thanks very, very much for sparing time and being with us, Mr. Das. I first want to talk to you and congratulate you on what a big thumbs up you've really gotten. As far as the Indian markets are concerned, they seem to be breathing a big sigh of relief. But a quick clarification before I throw it to a star-studded panel that will be asking you questions over the next few minutes. Just a quick clarity. Is there any review of the LTCG scheme, LTCG definition? Is the LTCG tax being reintroduced? Any form of changes in the short-term capital gains tax? Those are the clarifications that we would want from you at this stage, sir.
Don't cut to Modi. Don't.
No, I think if you have listened to the finance minister's speech carefully, so far as the long-term capital gain is concerned, it is mostly in the area of properties, where I think the period of holding has been really, reduced from 3 years to 2 years. So there is nothing more than what is contained in the budget speech, and in any case the finance bill is now in the public domain. So there is nothing of that sort. But having said that, let me mention just to, as an opening remark, I think overall if you look at it, the budget is strong with regard to the fiscal numbers. The budget is strong with regard to the macroeconomic underlying basis of the budget. And the budget is also very strong with regard to reforms. I think that is something which should not be lost sight of. In fact, I was listing out the number of, I have listed out the number of reform measures which have been announced in the budget speech, and there are about 11 or 12 of them. I mean, starting with abolition of the FIPV, I think it should be seen as a huge reform, and plus also in the agricultural sector, we are talking in terms of introducing a model law on contract farming, on removing perishables from the APMC market. So on the whole, if you see, the budget is very strong on reforms, and that should not be lost sight of.
Mr. Das, I'm pleased to tell you that we've got a stellar lineup right here in ET now, from Ms. Chanda, Kochhar to some of the biggest market voices. Jim O'Neill also joining us live from London. But I'm going to ask you one question before we move on. The divestment target, very ambitious target of over 70,000 crores. However, and while one would be skeptical given the track record, the reason one is a little more optimistic is the statement made by the finance minister. One gets an impression that the entire issue of divestment is going to be seen in fresh light. Can you throw some more light on how is the government going to go about divestment in FY18?
You see, with regard to divestment, the listing of CPS is a clear roadmap. With regard to the listing of CPS is a revised mechanism with timelines is going to be spelled out. So there is a list of central public sector enterprises which are expected to list themselves in the market, and timelines will be fixed for listing them. And talking about the target, let's not forget that this year also the general insurance companies are going to be listed. Then there will be the listing of 3 major public sector enterprises in the railways sector, the IRFC, the IRCTC, and these companies have huge valuations. So therefore, putting together the target which has been fixed about 70 or 71,000 crores is very much achievable. It is very much within the reach. Plus, listing of several other public sector enterprises are also going to take place. So therefore, 71,000 crores is a very carefully arrived figure, and it will be done.
Okay, it's a carefully arrived figure, it will be done. I'm going to first toss it to the economists in the panel and then to the market experts. Swaminathan Iyer, consulting editor ET now, and I know you read his columns very carefully, Mr. Shaktikanta Das. Swami, your question for Mr. Das.
Yeah, first, there was an earlier budget speech where Arun Jaitley talked about asset recycling. The idea that, roads and ports and so on can be sold in order the proceeds can be used for fresh ones. You seem to have abandoned, there's no mention of it, there's nothing of implementation. Has that been abandoned? Again, Niti Aayog had identified a list of companies for divestment. There is no mention of any of them. Has that also been abandoned?
No, you have mentioned 2 things. Neither of it has been abandoned. With regard to the the monetization of assets belonging to various public sector undertakings. This year also, in this budget also, the finance minister has announced amendment to the Airport Authority of India Act for monetization of land assets. Now, talking about the last year's budget announcement and what is to be worked, what is the outcome of that, there is an announcement with regard to the amalgamation of certain PSUs, and we have announced the formation of an oil major. So therefore, in the oil sector, some of the CPSUs, you will find that they will get, it is under consideration. The proposal is to have them amalgamated and constitute and form a oil major. And also with regard to monetization of land assets, a committee was appointed, and the committee has given its report with regard to the modalities that will be followed for monetization of land assets. So that is very much very much on track. And the second one you mentioned was about, if you could just mention, that was about, could you repeat that second point also, the second one where you think that it has not been followed up?
Mr. Das, we also have with us Jim O'Neill, the man who coined the acronym BRIC, and Jim was hoping that you would have a rather tough question for Mr. Das.
I guess my obvious question, Mr. Das, nice to speak to you. My immediate question is, how resilient do you think India currently is in terms of the economy from international forces? As I'm sure well, I know you know, many international investors often think India has some advantages as being reasonably insulated from the traumas around the world, and with the new president in Washington and some very unpredictable policies, I suspect some people might be more inclined towards thinking favorably about India than usual, but only if they believe that India is internally very resilient. And I wondered what you thought about that, particularly in the context of your budget.
I'm sorry, I couldn't quite, there was some problem with regard to it was not very clearly audible. Could you repeat? Supriya, can you just rephrase the question, please?
Right. Mr. Das, what he was asking was, how resilient do you think is the Indian economy in light of all that's happening around the world, the taking over of the Trump administration, the world getting more protectionist? How resilient do you believe is the Indian economy?
Okay, I mean, so far as Indian economy is concerned, I mean, of course, we cannot say that no economy is today not impacted by developments around the world. Obviously, India is becoming more and more globalized, and we are not in favor of protectionism. In fact, we feel that there should be open trade across nations. There should be free movement of people across borders with free movement of professionals. But having said that, let me also mention that Indian economy, as you know, I mean, these are well known that we have a strong domestic market. Low domestic savings have also now picked up thanks to the domestic savings have also now picked up thanks to the demonetization drive which the government has launched. So therefore, Indian economy, although not totally insulated, but I think it is quite resilient to withstand the various uncertainties which are now sort of happening all over the world. And I mean, that is how I would like to react.
108 points up on the Sensex right now, and I think you're getting a big thumbs up from one community that really watches this budget like a hawk. Stay with us, Mr. Das. I have a quick question coming your way, Ms. Kochhar. What is your overall rating of this budget? It's been a balancing act of sorts, as Mr. Das is pointing out there, but as one of India's foremost banker, how would you rate this?
Well, actually, I would say that, I mean, I don't really have a question to Mr. Das. I would just, in fact, reiterate the point that he made that, there is also a huge set of reforms there, which I would add to say that those reforms are really linked to, in some way or the other, ease of doing business or transparency and, bringing about simplification, whether it's the FIPP, the CBDT, and so on and so forth. So I think that's the one additional strong point of the budget. So I think it actually balances the investment and growth orientation along with fiscal discipline, along with simplification and ease of doing business. So I think it ticks really all the boxes.
Boxers, thank you so much for joining us. Chanda, Kochhar, MD and CEO of ICICI Bank. Mr. Das, now we've got a whole host of market experts, some of the biggest investors and CEOs of top brokerage firms as well joining us on the panel. And they all have questions for you because I'm sure you care about the market verdict. The market has given a resounding thumbs up to this budget. I'm going to start off with Rashesh Shah, CEO of Edelweiss, who's been with us through this budget day live coverage on ET. Now, Mr. Rashesh Shah, your question for Shaktikanta Das.
Yeah, I want to start off by complimenting Dr. Das, I think, on a fairly good, set of things in the budget. A lot of good trade-offs to be made, and I think the answer is there in front of us. Good for equity markets, bond markets, currency markets, which is huge. The one question I have, Dr. Das, is about FIPB. We have abolished FIPB. We said we're going to liberalize FDI. How will this get implemented? Will it mean that everything will be under automatic route and the slabs will be there, and as long as it falls in the slabs, it will all be automatic, or are we going to have some other structure for FDI investments in India?
Yeah, before I reply to Mr. Rashesh Shah, Supriya, I'd be very keen to know the rating of Swaminathan Iyer also, because that's very important. So if you could also come in and give his rating after some time, that will be really good.
I promise I'm going to get you that rating in 3 seconds from now, as long as you answer the question first on FIPB.
Okay. Yeah, the FIPB, there are two separate things. One is that the FIPB as an institution, as you know, it was set up in the late 90s and then it has had a long history. Now we have reached a position where government is going to abolish FIPB, and the finance minister has also said that a roadmap for the same will be announced in the next few months. So the exact modalities of how, basically the proposals which require government approval, they come to FIPB. How those proposals are to be dealt with is something which has to be dealt with. I would like to recollect here what we did with regard to, some of the NBFCs. Like, for example, NBFCs were earlier, FDI was permitted in certain limited number of sectors. But then we liberalized it, government liberalized it by saying that sectors which are regulated, where there is a regulator in place, those things don't require government or the FIPB approval. It can straightaway be cleared by the regulator, whether it is the Reserve Bank, SEBI or the IRDA, as the case may be. So the roadmap for the same will be spelled out. With regard to the FDI policy, there are almost everything has now been liberalized. There are only a few items which require government approval. They are under examination, and as and when a decision is taken, they will be announced. But at the moment, there is no proposal to put everything on the automatic route. Let me clarify that, because some cases would still, like for example, defense. There's a huge security issue involved in all defense related or all telecom related investments. So government will examine and come out with liberalization over a period of time in the various other sectors also. So far as FIPB is concerned, we have to have a simpler mechanism of dealing with proposals, applications for FDI which require government approval, how they will be dealt with. So that mechanism will be spelled out, I would expect, in the next couple of months.
Looks like markets are taking some kind of solace and confidence from the clarifications that are coming in from one of the chief architects of the budget, Shaktikanta Das. But Swami, Mr. Das is very keen on your rating, and how would you rate budget 2017 then?
5.5 out of 10.
I'm not so sure if that makes him happy.
I think last year also you gave the similar number.
Swami,
I think we will have a, one-to-one with Mr. Swaminathan Iyer probably. Thereafter he will change his views, because there are many more things which I would like to explain.
Okay. Sure.
And let me just take 1 more minute with regard to the borrowing numbers. I think the markets will be very interested to know about it. Now the net borrowing, there is some, people are asking question. The net borrowing will be 3.48 lakh crores. 3.48 lakh crores. After taking into account the buyback of government bonds which we are going to do in the current year. So after that it is 3.48 lakh crores. So in other words, 3.48 lakh crores of liquidity will be taken out from the market by the government. The rest will go back by way of redemptions, or it will go back by way of government buying back existing bonds which are already there in the market.
Right. I know Swami's verdict may be a little disappointing, but I can tell you Nifty is now up 100 points. That's a verdict that I'm sure you care about as well. But Swami is hard to please, as we all know, isn't it? Nilesh Shah of Envision Capital has a question for you as well. Mr. Shaktikanta Das. Nilesh, over to you.
Mr. Das,
what are the ratings?
What's your rating to
my
start
rating, 8 out of 10.
No.
No, but Mr. Das, congratulations on an excellent budget. I think this has truly been a very all-rounded budget. I just have one question on the universal basic income concept of UBI, which has got enough discussed. I just want to understand what's the government's thinking on that. Is it still premature to kind of introduce a UBI concept, or is the government having a very different view or an opinion on that? Because that was being looked forward to push up growth and to boost consumption and to give more money in the hands of households. So what's the current thinking on that?
You see, it is an idea which has been sort of placed in public domain through the economic survey for discussion, for public debate. But let us also remember that the subject is far more complex than many of us would imagine. I mean, then how do you deal with the subsidies which are there? Are you going to withdraw and replace all subsidies? How do you deal with the subsidies given by the state governments? So there are complex issues, and so far as the government is concerned, at the moment, no view has been taken on the same. It is a subject which has been now floated, which has been sort of placed in the public domain for discussion, for more ideas, for more suggestions. Let it be debated in the public space.
So that's one last question before we let you go. It's not very often that an architect of the budget indulges us right after the budget has been presented. Mr. Mukesh Bhutani, one of the most respected voices in Indian taxation, has a question for you, sir.
I firstly won't rank the budget because I need to see the fine print. But based on the speech and like everything, you have good, bad and ugly. I would say there are several goods, few bads, none that I could think of which is ugly. Mr. Das, I have a question for you on the tax rates. I think you took everyone by surprise by reducing the corporate tax rate for medium and small enterprises to 25%. My question is, and I know that there were revenue considerations, my question is this the new normal, or are you going to still stick to the commitment of bringing it down for all taxpayers? My other question is on individuals that you have levied an additional surcharge of 10%. Is that again a new normal, or will the government stick to its broader agenda that was laid down in 2015 to reduce the tax rates for all forms of taxpayers to 25%?
No, you see, if you see the budget of 2015-16, the commitment which the finance minister made was with regard to the corporate tax, where he said that, our corporate tax rates are higher compared to our neighbors and competitors in this part of the world. So the commitment was with regard to the corporates, where the rates now have been brought down in respect of companies with a turnover of up to 50 lakhs of rupees per year. And this is a roadmap. I think Revenue Department has already spelled out a roadmap for phasing out of exemptions. So phasing out of exemptions and reduction of corporate tax will have to move in tandem. So one would see in the next 2 or 3 years, one would see more and more exemptions going out, and the corporate tax rates also. I mean, there is a commitment, so both have to move in tandem.
Mr. Das, I have one final question. I know you have a very, very busy schedule ahead of you, but why is it, and some of us were taken by surprise, that the GST will be a reality in the course of in this calendar year? Why is it that threshold rationalization has not happened for other rates, whether it's excise, whether it's service tax? Why is it that it has not happened, and when do you plan to really do this? Because GST will have to be an eventual reality.
If you see the budget speech, the finance minister has made a commitment that GST will be implemented from 1st July, and the various states, the state governments and the central government officials, they are working together. Broadly, there is a commonality of thinking with regard to the tax rates, and as and when the GST legislation is tabled in the parliament and in the state legislatures, you will see that the rates will be spelled out at that time. But I think there has been a tremendous amount of convergence so far with regard to the rates.
Right. Mr. Das, one quick clarification on the GDP growth rate that you've assumed before we say a big thank you to you. What is the GDP growth rate that you've assumed in your budget arithmetic, nominal GDP?
Nominal for next year, we have assumed 11.75%.
So 11.75%. Thank you so much, Mr. Shaktikanta
Yeah, current year we have assumed 11% nominal. Next year we have assumed 11.75% nominal GDP growth.
11.75. Okay, we'll probably have more questions for you later in the day on how the numbers add up. But thank you so much for joining us with that perspective. Chief Architect of the Budget Department of Economic Affairs Secretary Shaktikanta Das, live and exclusive on ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.